So, Craig, I know you've been watching all of this very closely. When you look at their meeting, the kinds of things they discussed, but particularly this latest message from Xi, what do you make of this?
Well, firstly, thank you very much. President Biden and President Xi had a 3.5-hour meeting earlier this week. And I think that the main outcome of that meeting would be the establishment, or at least the announcement, of some working group mechanisms on a number of important issues, including climate and also trade and investment. So we'll have to wait to see how that's fleshed out, but it's a positive sign. Talking is better than not talking.
I can agree with that for sure. That's what keeps us in business. In terms of the business community in the U.S. and also those doing business in China now, are they eager? Do they believe that something can change in the right direction now? Or are they still skeptical, still worried?
So I think that 2021 was an excellent year with trade and investment both increasing at a very rapid clip. 2022 has been much more difficult. And in 2022, we're suffering from the impact of the zero COVID policies and a sharp slowdown in the Chinese economy. So vis-a-vis 2023, I think it depends on the policy choices made by both governments. And therefore, we're happy that there will be at least some form of dialogue on the important economic issues. Whether or not they will be able to make any breakthroughs remains to be seen. In early December, the Chinese will have their economic conference to talk about these major problems. And I think at the close of that conference, we'll have some indicators as to where economic policy will go and how they'll address the very acute cyclical problems that they're facing in real estate, youth unemployment, local finance, among others.
To what extent, because we talk about, yes, you have signs from high-level leadership, but to a large extent, people-to-people, business-to-business relations continue. That certainly has been the case when it comes to Australia and China, despite that relationship deteriorating. Is that the case for American businesses, or is there an increasing sense, no doubt compounded by COVID-0, that China is a market that has become too hard and they feel too unwelcome?
So the American companies that have an installed base already have investments here, very much committed to the market. Most of our companies are in China for China. They produce in China, they sell in China, and that is continuing and indeed expanding. However, on the supply chain side, there are investments, the marginal investments are going to other economies, incremental investments, as companies choose a China plus one or a China plus two strategy. Everyone is trying to avoid a single point of failure in their supply chain, and that just makes good economic sense. So we see a complex mixture of large companies in particular doubling down on China, but companies worried about their supply chain and the resiliency of their supply chain, adding investment elsewhere. The main concern that I would have is that there are relatively a few new entrants into the market, so those who are not yet in China are finding it easy to look elsewhere rather than at this 20% of the world's population.
At the Bloomberg New Economy Forum, we spoke to Gary Michel as well as Nisa Leung from Teaming Capital Partners. And among the likes of Teaming, the likes of Sequoia, we have seen a lot of these VC funds focused on China still managing to raise funds. Is this likely to continue, and is there a concern that some of these kind of really hot spots of investment like biotech, like pharma, could come under regulatory strain?
I do believe that there is a movement in Washington to bring greater government regulation to U.S. investments in various high technology areas, particularly those that may have national security implications. For example, in the semiconductor area, quantum computing, and AI. If there are American investments that are going into Chinese companies that may be supporting the Chinese military, then I think that they should expect additional regulatory scrutiny. In addition to that, both governments are clamping down on data, and particularly cross-border data flows, in a very broad sense, be it personal data or national security sensitive data. There's a great deal of regulatory efforts underway in both governments, and that could also slow business integration.